its depreciation will stay. It's like your depreciation is affecting this, your asset. So it'll go down by this amount, down by that same amount, down by this amount. On this side, it's going down by a different amount every time.
I got Battlefield 3 still works. Battlefield 2.
Don't worry about the 5.3. That was just the beginning.
Wanted to compare notes.
That depreciation.
The first thing you all had to do
But the interest and
was determine what amount goes into the asset and liability account when you sign the lease. Once you get us started, tell us who you are.
Terrence.
Terrence, what is the amount that's going to go into the liability and the asset account when you first sign the lease?
53,460.
How many have 53,460? Raise your hands high. Okay, good, most of you. That's where you start. This company will put on their books an asset and a liability based on the present value of the lease payments, just as if they went out and bought the asset and borrowed the money to get it. Okay, so 53,460 is where you start. The second part of question 1 had to do with what is the impact of this on the company's debt ratio and return on assets. Go ahead and pull that down, Sam. Okay, slide down the whole thing a little bit to your right. There we go. You can see that the debt ratio is calculated by taking the company's total debt divided by total assets. So what just happened? The company signed a contract that the accountants decided was a capital lease, which results in more assets and more liabilities. So in the debt ratio, total liabilities and total assets both are increasing by the same amount. Got a math question for somebody. You look like you need to answer a math question. Tell us who you are.
Rick.
Rick, if you've got a fraction that is less than 1, a fraction that is less than 1, and you add the same number to the numerator and the denominator, what did you just do to the fraction?
Divided it by 2.
No, you're going to add the same number to the numerator and the denominator. What happened to the fraction?
Multiplied it by 1.
Well, let's work this out. Think this through with me. You've got a fraction that's less than 1. Let's say 1/2. Okay? Add 1 to the numerator and the denominator. What is the fraction now? Instead of 1/2, if you add 1 to the numerator and the denominator, what's the fraction now?
3/3.
You sure you know that? I mean, I heard your buddy tell you. You got a 1, and you add 1, you got 2. You got 2, and you add 1, you got 3. So 1/2 turned into 2/3. Did the ratio or the fraction get bigger or smaller or stay the same?
Got bigger.
Do it again. Take 2/3, add 1 to the numerator and the denominator. What do you get?
3/4.
So what happens? A company signs a capital lease. They add the same number to the liabilities and the assets, and they've made that debt ratio go up. Because almost every company is going to have a debt ratio that is less than 1. Think about a balance sheet. Assets equals liabilities plus equity. If a company has any equity at all, the liabilities are less than the assets. That means that the debt ratio is lower than 1. But if you add the same number to the numerator and the denominator by signing a capital lease, you make the debt ratio bigger. You're going to take your company's balance sheet to the bank, and you're going to show them the debt ratio, and it's bigger than it was before. That's not good for you. That makes you look more risky, the judge. It's a measurement of bankruptcy risk. You've got more debt financing your assets. Not only that, look at the other ratio up there, return on assets. Return on assets is a measure of your profitability. You just signed a capital lease that makes the assets bigger. If the assets are bigger, the return on assets is smaller. The denominator of the fraction goes up, so the fraction gets smaller. Not only do you look more risky, but you look less profitable because you signed a capital lease. companies don't like capital leases. Walmart did not want capital leases, despite the fact that they got $3.2 billion of capital lease assets. Every company that is acquiring assets with a lease, they would rather be an operating lease. Because if it's an operating lease, like renting a car, you don't put the asset on your books, you don't put a liability on your books, you don't have to do that. Therefore, it's no surprise that many companies, when they negotiate capital leases or lease contracts, the present value of the lease payments will be 89% of the asset's value. Why 89%? Because they didn't want to jump over the hurdle of 90% and make it a capital lease. Any question about that? Okay, second thing I wanted you all to do for me is determine what the depreciation expense is. Tell us who you are. Go ahead and grab that. Let it hear you. Ben, what is the depreciation expense on this asset for the next 3 years?
I do not know.
What technique are they using for depreciation? Look at the problem. How are they depreciating their assets?
I do not know. I was looking at those problems.
Take a look at the problem. It tells you how are they depreciating the assets. Look at the problem. It tells you. What method do they use to depreciate the asset? Just read the problem. There it is. Straight line depreciation. So if you've got an asset that you're depreciating straight line, how do you do it? Who can help? What's the formula for straight line depreciation? Yeah, go ahead.
You just take 53,460 divided by the 3 years.
You take the cost of the asset minus a zero residual value if it's capital lease. If you've got a capital lease, when the lease is over, there's no more value. Take the original cost, which you said was 53,460, and you divide it by the number of years of life, 3 years. So you're spreading out 53,460 over 3 years. Sam, tell us what that is. How many people have 17,820 per year? It's the same every year. The depreciation will be the same every year. After 3 years, what's left? Zero. Questions about the depreciation? Okay, now I want to know interest expense the first year. You're on the spot. Tell us who you are.
I'm Michelle.
Michelle, what's the interest expense for the first year?
I'm not sure.
Pass that on to the person on your right. He's a Royals fan.
Yeah.
Talk to us.
Well, go Royals, and I don't know.
You don't know either. You disappointed me. I go all the way back to the Kansas City A's. I'm disappointed. You gotta make me proud next time.
Okay. I'm a Royals fan too.
All right.
2,207.6.
How many have about 3208? Good. Because how do you determine interest expense? The amount that you owe times the interest rate. How much do you owe? You owe, go ahead and raise that whole thing up a little bit, Sam. The amount that you owe is 53,460. Remember that first calculation you made is not only the value of the asset you begin with, it's the value of the liability. So we owe 53,460, and the interest rate is 6%. So I rounded up here. I got 3208 for the interest expense. Now, this is what I think was getting some of you stuck a little bit. What do we do now when we go on to year 2? Well, think about what just happened. Thanks, Sam. You are actually making a payment of 20 grand. That's how much the lessor, the owner of the asset, expects you to pay. You're going to pay $20,000. But you just told me that of the $20,000, 3208, give or take some change, that's the interest portion of the payment. The rest, $16,792, that's how much of the debt itself that you're paying off. You no longer owe $53,460 because you're paying off some of it. How much do you owe now after the first payment? Looks like now you owe $36,668. Again, you made a payment of 20, You calculated how much of the 20 is interest expense, the rest is paying off the debt. So now in the second year, the interest expense is based on what you owe, which is only $36,668. Times 6%, you should add about $2,200. Once again, you're making payments of $20,000. $2,200 is the interest portion, so this is how much of the debt you paid off in the second year, which means after 2 years, you only owe $16,868, and so on and so on. Any questions about this? Again, this is the payoff of the lease is just like the Sprint Citibank loan. You borrow so much money, we determine the payments that should be made, and every payment has a part interest and a part paying off the debt itself. How many people got all of those numbers right for the payoff of the lease? Raise your hand. Okay, I think there's probably about 10% of you who right now can walk into Monday night's test if there's a capital lease on it, and you'll do fine. The others of you might want to make a note to yourself. When I got to this part of the problem, I had some trouble. Pay attention in class tomorrow, and make sure that you ask any questions that you need to. Question in the back is stretching.
No, is this the only exam on today?
Say it again.
Is this Shepherd's exam on today?
Yes, sir. Everything that we've covered since the last test is on the exam. Before you go, historically, it has been true that the averages on test 2 are lower than test 1. It's not always the case. Every now and then there are exceptions. But I believe the material in test 2 is more difficult. It's a bigger challenge.